Hi, this is Mani from bsc2nse.com, and in this video I'm going to talk about how to derive Nifty monthly range for a month and how to trade on it. Basically, this will be very helpful for an option selling trader who wishes to sell Nifty options at a safe distance, both call option and put option, or just call option. So that depends on how you're going to use it or how you're going to trade in when it comes to option selling. For a long-term investor who's going to pledge equity and then sell call option, he'll be looking to sell call option alone. And for a regular trader who simply looks to sell both the sides to play a hedging strategy on option selling, he'll look to sell both the call option as put option. So the key thing that affects here is that as VIX changes, the range for month where you can sell safely will change. If VIX is higher, then you need to sell really far away, like 800 points away at start of the month. If VIX is lesser, something like 16, 15, then obviously the range is going to be lesser, wherein you can sell even 500 points away, 600 points away. So it's going to keep changing from time to time based on the scenario and based on how or where VIX is and the time left to expiry. So here we put three values here in the Excel sheet. One is the current price. So let's say Nifty yesterday closed at around 7210, and then the India VIX we need to fill in this Excel sheet. As we fill these three or modify these three rows here, the range here will adjust accordingly, right? So and the first is the current price, and then the next is the India VIX. India VIX, the easy place to go and find is go to Google Finance, or you can also go and find in nseindia.com. In Google Finance, in the search bar, go and type India VIX and click on it, and you can also get the daily chart. And for an option seller, this is also very important. So if you see VIX beginning to dip, that's a good time to enter option selling. And if you see VIX beginning to expand, then you should choose far away options to sell, because as VIX expands, the options premium will also begin to expand and it will not drop. The options premium will not drop by much. So currently, if you see here, if I zoom into this chart, last few days the VIX has been dropping. You can see here from 26 to 21 now. So the VIX has been gradually dropping over the last 1 week. So last 1 week would have been a good time to be shorting options. And you can, so the value here that you see here is 20.92. So I can just fill the same value here, 20.92. And as I change the VIX, the range is going to change. And the next important variable that we want to change here is the formula here. Once I click on this cell, you can see the formula at the top. The only thing you want to worry about is the square root of 1 divided by square root of 365. 365 is a fixed component number of days in a year, and I just want to change this 1. If I use 1, it means that it's going to give me the range for intraday. So if I use the value as let's say there's only 4 more weeks. I'm recording this session on a Saturday, and next week is the expiry week, and there's only 4 more trading days left. So the number of days left to expiry we should fill in here to get the range for till expiry. So if you are at the start of the month, you will put in something like 20 or 30, 25. Include even the weekends as number of days left. But of course today is a weekend, but today is the last week, so there's only 4 more trading days, so I'll just fill it as 4. But start of the month, let's say on day 1, the first of the month, if the expiry is 26, subtract 1 out of 26 and you get 25 days left, and then hit a tab. So you'll get a higher range. So 7210 is the current price, and you see that the resistance is there at 75, and similarly at the bottom the downside resistance is there at or reversal, not resistance here, reversal point is there at 6899. If you want to sell really far away start of the month, when Nifty is at 7210, you have to sell at 7800 or 7900. Similarly on the put option side, somewhere around 6600. This is of course the Fibonacci value of 1.618. Okay, Now right now there's only 4 more days, so I'll just modify this formula here from 25 to 4 and hit a tab, and you can see the 1SD price range is 157 points, and you can see that the first reversal on the upside is 7307. The aggressive option seller can go for shorting 7300 call. Relatively very safe trader can go and sell 7350 call and 7400 call. And similarly on the put option, again markets are bearish, so I would feel safer selling somewhere at 7000 or 7050 level. And an option seller who wants to do both call option and put option can just choose these two levels parallelly in these rows. So a guy who wants to play really safe can sell 7400 call as well as 7000 put. Someone even safer, I think 7400 call itself is only 4 rupees of premium, which is approximately less than 1% returns in a week. It is still a decent return, like 3% a month. 3% a month is still extremely safe. So with 1 week to go selling 7400 call, you will still make around 0.75%, 0.8% in option selling. And of course, if you're using a discount broker like Zerodha and you're doing multiple lots, the brokerage will not be a problem. And you can just choose accordingly. A very risky trader can short something like 7300 call and 7100 put. Based on this, you can choose the strike price, where to sell the call option, and again depending on the number of days left to expiry, depending on what is the VAX currently. Also take into account whether the VAX is coming down or going up or staying flat. That will help you decide when to enter into option selling and when to book profits and so on. So for example, when VAX is beginning to dip, you see two negative candles one below the other, that's a good time to enter option selling the next day itself. On the other hand, two positive candles one above the other in terms of VAX, you should wait for a few more days before the VAX turns down. So when the VAX is going up, it's probably not a good time to enter into an option selling as a trader. So this Excel sheet, all you'll need to feed in is 3 values: Nifty open price, VAX, and then click on this cell and modify the formula, wherein you just need to fill in the number of days left to expiry, and you will get the range. And again, based on the range and based on the if you're a high risk trader, you try and sell around these yellow line zones, the strike prices around the yellow reversal point zones. If you are relatively a safer trader, go 1 or 2 levels more. I think 1.2 is a pretty good area to short always. Even start of the month, you choose this level 1.2, which will be very safe. With only 4 more days to go, selling call option and put option with a 400 point range like 7400 call and 7000 put is pretty good to do. And that's it for now. And I'll try and put the Excel sheet in a Dropbox link, and I'll put it in the video description so you can download it from there. And any questions, any queries, post on this video. Subscribe to our YouTube channel and stay in touch. And check out bse to nse.com if you want to join our trading group. That's it. Thank you. Bye bye.